Tech stocks is one aspect to the market, but of course there is much more to the market than simply a tech position. Look, I mean, from our perspective, we would see a moderation in GDP targets, maybe from 5.5% to say 5%. I think the fiscal deficit will remain stable. I think the CPI target will remain stable, but I do anticipate further cuts to the policy rate and the triple R. In other words, a reasonably positive pro-growth stance by government, which I think is just going to underpin sentiment. So the property sector is looking a little more attractive. We've seen some moves by the PBOC over the weekend to promote lending to investment grade companies, which I think will be supportive, and indeed SMEs as well. So overall and in the round, my sense is the government is keen to support growth, and I think this will filter through, and it's my belief that this will filter through to an enhanced appetite for risk by retail and mutual funds.
John, how are you feeling about India? How are investors feeling about India, given the Adani saga? Is it dissuading people?
Yeah, I mean, right now we're seeing a very pronounced rotation from India into China by foreign investors. India, in and of itself, is clearly a very domestic market, and as such trades rich versus other major markets in the EM complex. So therefore, you tend to see asset allocators allocating on the basis of valuations, and to that extent, India has been missing out. I think from a fundamentals perspective, the budget and the measures being put in place are sensible. Right now, I think what's driving Indian risk is technical factors. Its valuations, the rotation, and of course this transparency issue over aspects of the corporate space, which is deterring investors. My sense is that actually India will continue to underperform for the first couple of quarters of this year. Potentially, if the market stabilizes, we see more interest. But right now, it's a China story, and we have India in particular on underperform as a consequence.